Welcome to How to Money with Cole and Cole.
I'm Cole.
And I'm Cole.
We coach people every day on their money and how to plan for the future.
As financial advisors, we're here to have an honest conversation and educate you on how to money. Intentionally and passionately to hit your money goals. And we'll throw in some sports talk along the way.
Our mission and goal of this podcast is to improve your money journey and help you create the financial life you deserve.
So let's talk money.
And sports.
Hey everybody, welcome back to How to Money with Cole and Cole, episode number 5 of the show. And I've got with me the superstars of the show, as always. Cole with a K, Cole with a C.
Superstar.
Yeah.
I like that, man. I like that.
You're getting better. First it was stars, now you're up to superstars.
Okay,
right.
I can handle that.
Pretty soon you'll be Hall of Famers.
Yeah.
Hall of Famers in the show.
Okay.
No, so it's good to be back with you all. Today is to give perspective. Today is May 13th as we record this. This will be airing on May 31st. Just keep that in mind as we talk about our predictions of and anything to do with sports. We're not crazy, I promise.
Right.
So how's life been for you all? How's the financial world?
It's been a little crazy lately.
Yeah.
There's
There's
a
a lot going on in the world, and family's busy. I'm gonna give a little personal plug here. My little 5-year-old Kale had his first two baseball games this past Saturday. So
nice.
How's that?
It was awesome. It was a cool experience to see. He's playing up with a 6-year-old team. So
that's cool.
And I help coach. So that was a fun thing to see all the little guys kind of competing for the first time, and fun. We're busy. Life's going to get real busy, and I know, Cole, you've got all kinds of things, double what I've got going on from the personal side.
I kind of had an opposite. We had another trip to the ER on Tuesday. My son David had a little recess. I won't go into the details of it, but he cut his finger and got 11 stitches.
Ooh,
I saw the picture. It's pretty gnarly.
It's pretty gnarly, and so he's out of sports for 7 to 10 days, which he cried upon and almost made me cry because I love that he cares that much about it. But so no, everything's great with our family. I mean, that was just a blip in the radar. But things are, school's out in 2 weeks.
I know.
I couldn't believe it the other day.
I graduated last week.
Hey, congratulations!
Nice.
Yeah,
Congratulations.
It feels nice.
You got a lot going on.
Yeah, for real. And it's nice to be. This is my first week full time here at Spin. So
Yeah. Have you set a date for the wedding yet?
Yeah, June 25th. So
next year.
No. Like a month from now. We've been engaged since October.
Okay.
Oh, okay.
Yeah.
I missed that.
Yeah.
That's the same day my sister-in-law gets married. Are you getting married here?
Yeah.
Really?
In Fort Dodge, yeah.
Oh,
Cool,
crazy.
man.
Yeah.
My
That's
invite
coming
must
up.
got lost in the mail. How about
me
your
too.
school?
Me too.
Yeah. Oh, okay.
Yeah, and so June 25th, and I looked at the calendar yesterday and it was like 45 days, and I was like, no way. Like, it's already been that, because we started at like 230. It's down to 40.
Comes fast, doesn't it?
Yeah.
I know,
Yeah.
and the last 20 days have just blown by, and I'm like, man, do that 2 more times and we're married.
Yep.
Right.
So
Right.
yeah, it's exciting, but
There you go.
that's just a small thing in my world.
Yeah, just that whole wedding. thing.
So the NFL draft just happened, and I know Cole's Steelers took a quarterback.
Yep.
The only one in the first round, right?
Yep.
Only
Right
one
out
in
of
the
Pitt. Right out of Pitt to the Pittsburgh Steelers. Yeah, the only quarterback taken in the first round. The first time that's happened in 20 years in the NFL draft. There's only been one quarterback.
There might have been one, but I believe there was no quarterbacks in the second round either.
And like no running backs in the first 2 rounds or something like it was something crazy.
It was like a lineman, defense, wide receiver draft.
Yeah.
There was a lot of anomalies where I think Georgia had 5 players taken in the first round. We had 2 Iowa boys, first rounders.
Yeah.
UNI Panthers. Yep, and Hawkeyes.
Our first rounder.
That's awesome. That's
Yeah.
pretty
That's
cool.
exciting.
Yeah, pretty cool to see locally
On the
here.
NFL note too, we had a fun thing out the Fort Dodge Country Club that both me and Cole play out there. We had Kirk Cousins sighting.
I know. I heard about that, and I was
Yeah.
like, wow, we actually have like a celebrity in town.
Yeah.
This is a first.
Yeah, maybe the most famous person to ever go through Fort Dodge. I mean, other than like a presidential.
Yeah, we had
presidential
the vice
person.
president here one time, like 6 years ago or something.
Right, but I mean,
that.
like sports person.
Yeah, for
I mean,
sure.
Nick
Sports-
Collison kind of grew up here, but yeah, that was kind of crazy.
Kirk Cousins is much more high end than Nick Collison. No shame to Nick Collison, but
Yeah. Well, so Cole, we were talking in the office, and Cole said, "Hey, I got a call that Kirk Cousins might be playing with us on Wednesday. And I'm like, what?
Yeah, that's crazy.
Yeah, it turned out he had called into the pro shop and was requesting maybe to play with a couple members or something at the point. So our head pro Steve Fuller called me and asked if he could play with our group, and I'm like, sure, that'd be awesome. And Steve actually didn't know. He's like, I don't know. He said Kirk Cousins from Minnesota, but he goes, I don't know if it's actually him or not. And turns out it didn't work out for us. He ended up having to play his schedule on Tuesday, so he was out there Tuesday. Didn't get to play with us. Kind of a bummer, but
it was the real Kirk Cousins.
Yeah, it was the real Kirk Cousins. Yeah, oh yeah, oh yeah. That was,
Cole's brother Cody brought a hat to him and had him sign it. And from what I heard, he was the nicest guy in the world. And was
stand-up guy. From what I heard,
I've heard that about Kirk Cousins just in general, is that he's a super good guy. Just a normal, he's just a normal guy and just plays football and relatable and everything. So I've heard a lot of good things about him, but that is actually super cool.
I think I was kind of talking to my wife about this. It'd be kind of hard though, wouldn't it? Like, you're just like a normal guy wanting to just go play golf, and we're out in the middle of nowhere, and you got, I think there was quite a few people by the end of his round was hanging around his car and stuff. They'd be a tougher thing where to try to just have a under the radar at times. It comes with the lifestyle, lifestyle, but it'd be hard. Every
celebrity is like that. Like, you think about it, it's like, that's one reason I've talked about. Is like, I would not want to be a celebrity for that reason. Is you can't live a normal life. Yep. It's like, if you're a celebrity, everybody knows you. You're gonna get flocked no matter where you go. I saw a thing last year. It was Patrick Mahomes had gone to like a restaurant, and I don't know if they knew they were coming or what, but everyone purposely left his table alone. And before he left, he paid everyone's bill and said to the whole restaurant, "Thank you for letting us have a normal dinner at a restaurant." Yep. And he paid everybody's bill in the restaurant.
Cool.
Because
that is a cool story.
Yeah, because
now wait, you said you never want to be a celebrity. So if I was going to pay you $40 million a year,
okay,
you don't think you could take on some of that stuff? Because I think I would be able to manage.
Okay, yes,
there's good with the bad for sure.
Yeah, but the popularity part of the everyday life would get annoying.
Yeah, well, we won't have to worry about that.
Yeah, for real.
Well, transition a little bit to our, this is the piece of the podcast where we all like to make our predictions, right? So a couple events. I know Cole and I, big golf guys, as all the viewers know, but we got the PGA Championship and the U.S. Open coming up here within the next month. So we're gonna make a couple predictions here. So
before we tape again, both these tournaments will be over. So. I'm gonna so we'll go back and forth here. I think we got to pick different guys, and I think we already kind of know that we're gonna pick different guys. I'm gonna take Colin Morikawa.
That's a good pick.
Yeah, he hasn't won a tournament, a major for about a year. I think he won. Did he win the U.S. Open last year? Maybe, but anyway, I think he's been playing well, and I think he's gonna grab one of these titles.
Now, just to clarify, each are picking three people to do well in the tournaments, and between their three are going to win the tournaments.
Yeah.
Yep.
So there's a total of 6 people for 2 tournaments. We'll see if 2 of them win.
See how we do. We've got some chances. It's kind of like a draft here. My number one guy, I'm going to pick Rory. I've picked him, I think, on some other stuff.
You're a Rory apologist.
But he hasn't won in 7 years, and he's trending in a really good direction. And I think you'll hear everyone in the golf world talk how talented Rory is, and I think he's long overdue. Has won almost every other type of tournament. So
yeah, I think he's feeling the heat a little bit. He's making it a point to win one of these tournaments this year. Yeah. Yep. I'll go to my next pick of Scotty Scheffler, which is like the obvious pick, number 1 in the world. But it's one of those streaks that you're on.
You got Rory. He's a Rory guy. If you want to be, you can be a Scotty guy. It's fine.
I'll take him. Yeah.
I'm going to go Max Homa. He won just recently the Wells Fargo. He's a guy, same thing, just racking top 10s. I think odds-wise, he's going to be up there in one of the 2 tournaments.
All right, my last pick, Tiger. I got to take him.
I love it.
Yeah, I love it. Because if he does win, then I'm going to sound like a genius. But if he doesn't, then who cares?
The fanboy in us. I mean, you just love, I flip the golf tournament on just to see how, whenever Tiger's playing, that's all I care about. Is okay, where's he at?
Is he playing both of them?
He's supposed to be.
He's supposed to be. Yeah. We'll see if his health holds up, but it sounds like he's been playing. So my final pick, again, this is kind of an obvious one always in. I was having trouble kind of rattling my brain of who to pick with JT, Justin Thomas. So I kind of picked 3 real common hot names right now. So
you got the 3 hot names, then you got obvious and fan favorite over here.
Yeah, there you go.
Yep.
So,
there you go.
We'll see. We'll probably go for 6, but golf's really hard. So.
Yeah.
Yeah. I wouldn't just be surprised. I'll just throw in another name out there. Dustin Johnson picks one of these up too. So, yeah.
Well, like you said, Cole, golf is such a hit or miss thing. Like you can have a good day and bad day, and then you can have a surprise day and just surprise everybody. So who knows? But I think right now the score is 1-1. I think because each of you have one pick correct. So we'll see how this tournament goes.
Yep.
But yeah, I think now is the time for us to get into the money talk because that's the real reason people come here.
Right.
They want to know about
apparently
the all of the wisdom from Cole and Cole, and so today is a very relevant topic right now, and that is we're going to be talking about just kind of the current state of our economy and inflation and the market because there's a lot of people who have a lot of uncertainty. There's a lot of uncertainty right now,
right?
And they have people are a little bit anxious about what's going to happen, and so we're just going to talk about it and just maybe bring some calm to some people, help them understand kind of what's going on for those that don't totally understand, other than they go to the grocery store and eggs are $5 a dozen or gas is $4.15 a gallon, and so for the people who don't really understand the in depth of it, maybe we can help give them some knowledge on that. So. I'm not going to say a whole lot. I'm just going to let these people who know exactly what they're talking about take it away from here.
Well, let's just start with a general term. People talk about the market, the stock market, those terms. So tell us a little bit about what actually is the market/stock market, Cole.
Yeah, so I'll start with maybe the most common one would be everyone. There's two really common ones. Say the S&P 500 and the Dow. You hear. I think the older generation, Dow was always the very common, and the Dow is basically 30 industrial stocks. The S&P 500 is probably the most relevant index, or think of people talk about the market. That's basically the largest 500 companies, U.S.-based companies, and those are the most two common. When people just say the general term, the market, they're probably talking about, but that's a pretty broad, a broad topic. And I always, it's very relevant. Obviously, the market talk, everyone's talking about inflation, things going on. But, one thing I think people got to put into context too is there's always headlines and always something going on, right? That's one thing to put in perspective of like people find, fear or find different things to fixate on. There's always whether it's politically, whether it's, inflation, war, whatever it might be, there's always that cycle. So that's why I always tell people that news, one thing that's hard with our business now is how quick and relevant and easy it is to get news, whether it's good or bad news. We have it at this, an instant data.
Yeah, I was going to say that the days of people having to open up the newspaper and see what the stock market did the day before are over. I mean, they don't look at those prices and those quotes in the paper anymore, and they're available online in every different place. So that's a change that's happened with the market, is that it's something that we can access at all times.
Well, you also think about it is the newspaper refreshed once a day.
Yep.
Right.
Whereas this refreshes at the click of a button.
Your Twitter feed, your wherever you get your news from, whatever it might be.
And so that's going back to the instant thing, but it's also not just instantaneous. I can get to it, but it's instantaneous updates. And so, I mean, we see stuff change literally in a minute. You see something change drastically.
So
yeah.
So Cole, think of things going on right now. Volatility in the market.
Right.
Ukraine. War with Russia going on, inflation, higher prices for everything. Talk a little bit about what some of your client conversations. Some of the things that's going on and things we're doing with our clients.
Yeah, the main conversation I've been having with clients is about inflation and the importance of staying somewhat in the market. You don't have to have all your money into the stock market or anything like that, but typically in periods of inflation, the market is going to increase because prices are going up. So the market tends to go up because those companies are getting a higher volume of cash for that product, but not always. Yep. And anybody that says they can predict the market or tell you what's going to happen is wrong. And we're not here to try to do that either. We're not going to try to tell you exactly what happens with the market, but it is an interesting period of inflation because we've seen so many things in costs and the supply and demand. That's a basic economic thing that we all learn in college.
Yep.
In economics 101 is when supply is low, the demand is high. Also, price is high. Seems like you can't find anything from baby formula to products to build a house.
Yep.
Supply is low everywhere, so demand is high, price is high. That's how inflation works, unfortunately.
Yeah, you think about like the price of fuel. The supply is low between the shut off of the pipeline and the Ukraine issue.
Right.
And so you got gas at, what is it, $4.50?
Yeah, almost all-time highs, not as high as it was during the recession in 2008, but it's approaching that.
Yeah,
Correct.
it's close.
Yeah.
And so, I mean, it's like that everywhere.
Right.
You were mentioning it with the house supplies. Pat, who's on our next episode, was talking about OSB.
Right.
Used to be like, he said like $5 sheets, $40 a sheet. So it's just everywhere.
Right. Yeah. $5 a sheet to $40 a sheet in 2 years, which is that's rampant inflation, obviously. So when things are uncertain and things are, doing abnormal things, that's what affects the stock market. People get scared, things like that. But tell people a little bit about buying opportunity. Buying low, selling high, the old adage that's what you want to do. You don't necessarily want to go the other way.
Yeah, I think, again, putting things into context here of we're going through a choppy period in the market. There's uncertainty, but with uncertainty, there's always also opportunity. And I think you also got to look, people got to look at their own personal situations and understand. I think one of the most important things in what we do and talk about with clients is time horizon. Right? How long until you're going to be using that money? And that's where you take a scope. If it's right now, obviously you need to have less risk of the market, need to have more of a strategy in place for the purpose of that money. But for younger people that have 10, 15, 20, 30-year time horizons, this is a great opportunity. The market, the NASDAQ market's off 25%. The Dow's, I think, in the high teens down for the year. If you're someone that's contributing to your 401k, to your IRA, or whatever it is on a monthly basis, and that's dollar cost averaging is what we call that, where you're just have a systematic plan, you're buying at lower prices. So at some point, if you have that time horizon, the market will come back. And sometimes it takes longer than others, depending on a lot of other factors of what's going on and how the recovery kind of comes on. But this is a great opportunity for anyone that's in that accumulation phase. I think that's a big thing, is to separate. Are you an accumulator where you're still saving? Are you one where you're spending down your money? You're maybe already retired and you're winding down your assets. Two different strategies, and those people should have, quite different portfolios based on, their situation. But that's one thing I think we always, we're always preaching to clients and talking and getting them to shifted of not so much on the noise of what's going on around in the world, because there's always going to be something for someone to fear. Always. There always is. But looking at your personal plan, your personal picture, and saying, okay, yeah, this money's not going to be used for 20 years. We'll be just fine. This is an opportunity. You got to look at this opportunity versus the other person maybe, hey, I don't have that risk. A big piece of my portfolio is not in the market. So I don't have to worry about that piece. And that's part of having a solid strategy going into these periods of time.
Yeah, I use a quote from Warren Buffett when I talk to clients that I learned during the 2008 recession is be fearful when others are greedy, and be greedy when others are fearful.
Yep.
So when the stock market, and just an example of how I use this to my advantage in my own personal finances, is the other day we had the biggest drop in the stock market, NASDAQ, one day drop since the COVID crash, and I put $10,000 and bought all NASDAQ stocks. I put them in my personal account, bought all NASDAQ stocks because the market was down. I mean, that's the time you want to buy, is when the market is down, and especially at me and Cole's age. I know I'm older than you, but I still have 20, 25 years until retirement. So is the stock market going to be higher in 20, 25 years than it is right now? Most likely, yes. I mean, that's history has proven that. So I feel like it's a buying opportunity when you see those big down days, and talking to your clients that may have cash on the sidelines, or are looking at that accumulation stage and trying to get money in the market at the right time. That's where those opportunities present themselves.
Yeah, makes sense. So right now, before we continue with this conversation, I think it's an extremely relevant conversation, but what we're going to do is we're going to take our quick break, hear a word from our production team at Spin Market, and we will be back momentarily with the continuation of How to Money with Cole and Cole, episode number 5.
This podcast is produced by Spin Market and Digital.
Located in Fort Dodge, Iowa, Spin Market's highly skilled team can help you increase your market by updating your website, improving SEO, designing advertisements, and producing podcasts that will grab the attention of your market.
Contact Spin Market today for all your digital marketing needs at digitalagent@spinmarketwith2ks.com or call us at 515-302-8026. And to learn more, visit our website at www.spinmarketwith2ks.com.
That's digitalagent@spinmarket.com or 515-302-8026 or visit our website www.spinmarketwith2ks.com. Welcome back to How to Money with Cole and Cole. So, one thing right now with all of the uncertainty that and not just right now, but anytime there's uncertainty, is you hear the word recession.
Right.
And you hear people wonder and are concerned about a possible recession. So maybe you can expound a little bit on that.
Yeah, I actually just looked this up the other day because I was like, I know the definition is very like vague, or it's not something that, people say we're possibly entering a recession and they think the world's going to fall apart.
Yep.
What a recession is, the definition is that the S&P 500 is down for 2 consecutive quarters. That's it. That's what the definition of a recession is. Well, that doesn't happen very frequently, but when we're entering a recession, that's the lead indicator. So we've hit one quarter at the end of March. It was a down market for the S&P 500. The next quarter ends June 30th. So that would be, the year is broken into 4 quarters. Obviously, every 3 months is a quarter. And if the S&P 500 is down during that quarter based on the April 1st open date to June 30th, then technically we would be in a recession. Now, recessions don't typically last very long, and we're already, 5 months into that. So talk a little bit about that, Cole.
Yeah, I mean, it's that term, just like you said, it's thrown around quite commonly. I think as soon as we see a down, the market down for a little bit, you start hearing the word recession, and that's not the end of the world. I mean, the market cycle happens, and that's part of the market cycle. We don't only go one direction. If we did, this game would be pretty easy, and everyone would be doing the same thing. So it's not. So it comes back to looking at someone's individual picture, kind of where you fit the piece and where you see the opportunities. And I know we talked a little bit already about some things that people can do and how to kind of handle some of the emotions of it, or news cycle, all that kind of feeds into that, into that topic. But, Cole, I guess one thing, we were kind of talking with off air a little bit is dollar cost averaging. You want to go into a little bit further into that. And I think that's a great segue into the recessionary talk and kind of where we're at with this market cycle.
Right. That's something I talk to younger people about, especially is dollar cost averaging. What dollar cost averaging is that you don't do what I just told you about the last time where I dropped $10,000 in the market all at once, is that you're spacing it out on a regular basis. So you are doing your contribution on the first of the month, your Roth IRA, $500 a month or $300 or $200. You're dollar cost averaging that across those 12 months. And what the dollar cost means is that when the market is down, you're going to buy more shares of whatever you're buying. When the market is up, you buy less shares, but over time, you're going to buy more shares because you're spacing it out over those 12 months. Dollar cost averaging is a good thing to be with your consistent investing. What I was talking about is when you see a down market and you maybe have some cash on the sidelines to try to time the market. So talk a little bit about timing the market too, Cole.
Yeah, so this is a constant question, especially when there's volatility or uncertainty or any news headlines where it might be. Is now a good time to buy? I get that question all the time, and I always kind of pivot that back. I wish I had the crystal ball and tell you exactly, but I don't. So here's when I always And I, with my own money, we're talking about what I do, not only advise to clients, but what I do with my own money. I think it's more important, especially if you're in that accumulation phase where you're still saving and you still have an income, things there. It's more important to be in the market than to try to time the market. And I've got a little piece, and I wish I could, we could see the visual, but I know this is, it's a podcast, but I've got some stats here from December 31st, 2006 through December 31st, 2021, so the end of last year. And this is just taking the S&P 500 index. If you had $10,000 and you just bought that, in 2006 or the beginning of 2007, so you would have seen the financial crisis, all different, a lot of things have happened in that period of time.
Right, like a lot of ups and downs.
Crazy high interest rates, interest rate cuts, recession, a lot of issues. You would have made, over that period, if you just bought the S&P 500 index, you made 10.66%. Okay. And what I'm getting at here is, if you, going down here on the chart I'm looking at, if you miss the top 10 days through that period, top 10 trading days, your return goes from 10.66%. It gets cut in half to 5.05%. So you miss half the returns by missing only 10 days if you miss the top 10 market days at that point. And what I try to tell clients is a lot of our return comes in a very small period of days. Yep. So that's where it's more important to be in the market than to try to time. And I'm going to give one more number here, is if you miss the top 30 days, so say you were very unlucky and you somehow timed it, you actually had a negative return. So your money was only out of the market for 30 of those days for 15 years. 15 years, yeah. You had a negative 1.18% return. So that's something, and what that's illustrating is, how do we know when those top 10 days are? We don't. The best in the world don't. Mm-hmm. Yeah, the best in the world don't. The people that, that's all they do is look at screens and stocks and statistics don't. So that's where it's more important to be in than to try to time. And I think that's a very important thing to get across to people. Yeah.
So when I was talking about timing the market earlier, I was timing the market, but I'm leaving that money in the market, and I'm not going to take it out for 20 years. But I just wanted to get it in at a low point in the market. So we're kind of saying the same thing as far as try to. You want a dollar cost average in most of your money is what I typically tell people is I don't want you to invest all $20,000 that you're going to do in a year on one day. We want to break that up over time. But then also if there's a real positive or negative time in the market and you're like, okay, this is a good time, we can drop some money in at that point.
Yeah, and I just to clarify too is timing can be on both ways, selling and buying, right? Some people try to sell like, hey, I want to sell at the top, but do we know this is the top? No one ever knows. So I loved cold strategies because I actually did something very similar myself. Is if you have money that's going to be, say we get these really, really big drop periods like we've seen this past market week. We had some really large drops in the NASDAQ. Yeah, you can speed up. If you already have money that's earmarked to go into the market, maybe you were dollar cost averaging through the year and you already had that money set aside to go in. It is a good strategy at times when all of a sudden we're off 25% to say, hey, I'll just speed up that 6 months of contributions and do it now. And that's kind of what Cole did. He wasn't trying to play market timer. He knew that money was going to be invested in the market. Market was really down probably a little irrationally, just based on some things going on. And he thought that was an opportunity. And there's a lot of different ways to strategize in this. And I think it all comes back, and I keep pushing this, is, there's really three things that I want to focus on for clients is goals. So that's the use of the money, right? Your time horizon, and then diversification. Those are three things that you need to be thinking about. And if you don't have the plan, it probably makes these type of periods a lot more uncertain, and your maybe anxiety levels are a little higher than they probably need to be if you got a solid plan in place and like, hey, we've planned for this. We know the market does go down at times. Right. Stats say it. So I think that's an important thing and a very relevant topic for the market, current market situation.
Yeah.
Earlier, you were talking off air about what we were going to talk about. One thing you said is you wanted to finish with 2 tips, because we're about out of time. 2 tips for investing and for around this time right now. So what are those tips?
Yeah, I would say my number one tip is it's hard to not be emotional about your money. Yep. Emotional investing is what people get in trouble with, and I try to prepare my clients for a down market. And I'm going to say, you know, we're in this investment for the next 15, 20 years. The market's going to go up and down. We know that.
Yep.
But the people that get in trouble is when they emotionally call you and say, I can't take this. I want to sell. And usually what you end up doing is you end up selling at a low point, and you end up not making your money back in the market. So emotional investing is probably the number one thing that I would say is try not to be emotional when it comes to investing. Is that you want to take your emotions out of it, and you want to take history and look at what's happening right now and
the bigger picture.
The bigger picture.
Yep, look at the bigger picture.
Yeah. Try not to be emotional, and try not to try to time things up the way that you think things are happening, but just be relevant and talk to your advisor. Talk to don't do what your neighbor's doing. Don't do what your best friend's doing. Talk to your advisor and do what is right, and not maybe what you're thinking is right.
And we want to have those conversations. We want to know when people's anxiety levels or fear levels are higher, because that's when if you don't communicate that to us, that's where we'll pivot back and say, hey, we're in a good spot. We've planned for this. Your plan's built for this. We can do this, and that's, I think, the relevance with with working with a financial advisor. One other, I'll kind of close here. I'm going to give a tip, just more tailored, I'd say, to our retiree type investors, or people that are maybe drawing an income off their portfolios. And I think this is something's very important. If you're going to be withdrawing whatever might be $1,000, $2,000 a month to live on out of your portfolio or your retirement savings, you need to make sure you're prepared for a down market cycle like we could be going into. Who knows? It could be different the next time we talk on this podcast. But and one thing I always preach to my people that are retirees and we plan for, if they're taking income from their portfolio, we want to have 12 to 18 months of income parked aside that's not subject to any market volatility. And and the reason being is, historically, looking at recessionary periods, down market cycles, it takes us about 12 to 18 months to get back to highs, or back where we were at that high point before the recession or pullback period has taken place. So if we know that's what history over 100 years of the S&P says, if we've got 12 to 18 months, we can let the other side of our portfolio, or maybe the more volatile side of our portfolio, ride out that highs and lows and not try to time, because we know we've got 18 months of income that's not subject to anything. We're just fine. We're going to be just fine at that point. And I think that's a really important thing for people, that, especially the ones that are reliant on their portfolios to live on. I think very important thing for people to have.
Yeah.
Yep.
It makes sense. Just do what you can to be like okay, in the sense of like you've got the money, but also know that it's going to bounce back at some point.
Yep.
Right.
So, and you kind of already said it, I think. My last question would be, is somebody comes to you and they are freaked out. How do you calm them down in a time when they're like, oh, it's going to be, the world's ending, we're going through a rough time in the economy? What do you say to them whenever they're freaked out, to say it's going to be okay?
Well, I don't have it happen very, very frequently, to tell you the truth. But when clients do call me and they have some concerns, I really point them to look at their overall portfolio. They may be only looking at one investment that's down, but you've got to look at the whole picture. And that's what me and Cole do, is we look at the whole picture. So we intentionally put some of your money at risk, but we're not going to put it all at risk.
Yep.
So I had a client just the other day, and I said, well, I brought up your whole portfolio. Yes, that one is down 25%, but overall you're actually even for the year.
Yep.
Because the other investments did well earlier in the year. And, with them not, or they were maybe at zero or something like that. So it wasn't as drastic as they were thinking. And once I talked to them about, okay, like Cole said, we try to prepare, especially our retirees and pre-retirees. We try to prepare for a time like this, because we don't want to see a 20, 25% decline right before you retire, or while you're using your money in retirement.
We get the old adage, people say, oh, the markets or the Dow's down 20% or whatever it is. And my response a lot of times is like, we don't own the Dow.
Right.
That's not just what we own. And that's that diversification piece talked about of Cole's talking. There's other pieces of the portfolio than just the stock or equity side or the market side. There's a lot of other things that are incorporated for people's portfolios. So that's, we're looking at the whole picture. of saying, okay, how much, put it into context of the whole plan of things we got going on. I think that a lot of times it's not, some people are just more anxious than others at times. So sometimes they just need someone to talk to. And I think that's a big piece. We, because we have the same thing. Our dollars in the market at times, our anxiety level at times are higher, but ultimately we, you talk them through the situation and know that you're there for them. And we've planned for this. And I think most people, that's what they need.
And that's for you guys, where the coaching side comes in a little bit. It's
right. Of course.
You're going to be okay. Just give it time.
Yep.
It'll come back.
Coaching/counseling.
Yeah, of course.
Yeah.
Of course.
Yeah. And a voice of rationale sometimes is all people need. They look at it, they forget, and you're like, no, you're going to be okay.
Yeah, people see the market's down and they assume that their investments are down.
Yeah.
It's not always the case. Yeah. You're not always, like Cole said, you're not invested in the S&P 500 typically, or the Dow Jones or anything like that. Your investments aren't all those. And a lot of people will compare their 401k to the market. Well, if their 401k is diversified, it's not in the actual market. Part of it is, but yeah, that's something that we hear a lot is the market's down, my 401k is crashing, and well, not really.
Yeah. Well, that's going to pretty much wrap up this episode of How to Money with Cole and Cole, episode number 5. Just a reminder to all of the listeners, you can follow Cole K and Cole, or Cole with a K, Cole with a C. You can follow them both on Facebook, LinkedIn, Twitter. You can follow Central Financial Group's pages. You can visit their website, www.centralfinancialgroup.com. You can visit the CFG Fort Dodge landing page at www.cfgfortdodge.com. And new to the How to Money with Cole and Cole podcast is we have a YouTube channel set up with the video of this podcast. So you can subscribe, share, like, all of the above. And maybe you know somebody on an episode like today, maybe you know somebody who's a little bit anxious or is concerned about what's going on. And it's rational to be concerned. But maybe you know somebody, you can send this to them and go, take a listen to this. These guys, what they're talking about helped me not be so afraid or anxious. And maybe you can send it to somebody else and just share the podcast. And I hope that this was a help to you guys and that you learned something today. And we will see you next time on How to Money with Cole and Cole.
Nice.
You've been listening to How to Money with Cole and Cole, the podcast of Essential Financial Group, courtesy of Spin Market. Learn more about the Central Financial Group on their website, www.centralfinancialgroup.com.
For now, I'm Cole.
And I'm Cole.
And we'll see you on the greens.
Securities and investment advisory services offered through Royal Alliance Associations Incorporated, member FINRA, SIPC. Royal Alliance Associations Incorporated is separately owned, and other entities and/or marketing names, products, or services referenced here are independent of Royal Alliance Associations Incorporated. Material discussed is meant for general informational purposes only, and it is not to be construed as tax, legal, or investment advice. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Past performance is no guarantee of future results. Diversification does not insure against loss. Any guarantees discussed refer only to fixed insurance products and are backed by the financial strength and claims paying ability of the issuing insurance company.